Ever wonder how lenders decide whether to give you a loan, a credit card, or even a mortgage? It's a question that crosses everyone's mind at some point, especially when navigating the world of personal finance. We all know credit scores are important, but how do these scores come about? Who are the mysterious figures behind the scenes, pulling the levers of creditworthiness? The answer, in large part, lies with companies like Equifax. Now, you've probably heard of Equifax, maybe even seen their name in the news. But what exactly do they do? What role do they play in the financial ecosystem, and why should you care? That's what we're diving into today. We're going to demystify Equifax, break down their core functions, and explain why understanding their role is crucial for managing your own financial health. Think of the financial world as a vast network of interconnected players. There are lenders, borrowers, and then there are the data aggregators, the information hubs, and that's where Equifax comes in. They're one of the three major credit reporting agencies in the United States, alongside Experian and TransUnion. These agencies are essentially data warehouses, collecting and storing a massive amount of information about consumers' credit histories. So, what kind of information are we talking about? Well, it's a pretty comprehensive picture of your financial behavior. This includes things like your payment history on loans and credit cards, how much credit you're using, the types of credit you have, and how long you've had credit. It also includes public records information like bankruptcies and liens. Essentially, anything that paints a picture of your creditworthiness is potentially in their database. Now, how do they get all this information? They don't just magically conjure it up. It's reported to them by creditors, the banks, credit card companies, retailers, and other lenders you interact with. Every time you make a payment, miss a payment, or apply for credit, that information is often relayed to the credit reporting agencies. This constant flow of data allows Equifax and the other agencies to build a detailed history of your credit activity over time. This data is then used to generate your credit report. Think of your credit report as a financial resume. It's a summary of your credit history, outlining your borrowing and repayment habits. Lenders use this report to assess your creditworthiness, to determine the likelihood of you repaying a loan or credit card. A good credit report, with a history of on-time payments and low credit utilization, makes you a more attractive borrower. A poor credit report, on the other hand, can make it difficult to obtain credit or lead to higher interest rates. And that brings us to the all-important credit score. Your credit score is a 3-digit number calculated based on the information in your credit report. It's a statistical snapshot of your creditworthiness at a particular point in time. While the exact algorithms used to calculate credit scores are proprietary, they generally consider factors like payment history, amounts owed, length of credit history, credit mix, and new credit. A higher credit score generally indicates lower risk to lenders, while a lower score suggests higher risk. Equifax, along with the other credit bureaus, plays a critical role in the credit scoring process. They provide the raw data, the building blocks, that are used to calculate these scores. Lenders rely heavily on credit scores to make lending decisions quickly and efficiently. It's a standardized way to assess risk and determine whether to approve a loan application. Now, it's important to understand that Equifax doesn't decide whether you get approved for a loan. They simply provide the information, the credit report, and the data used to calculate your credit score. The lender makes the final decision based on their own criteria and risk tolerance. But the information provided by Equifax is a crucial piece of that puzzle. Beyond credit reporting, Equifax also offers a range of other services. They provide credit monitoring services, which alert you to changes in your credit report. This can be helpful for detecting potential errors or even signs of identity theft. They also offer identity theft protection services, which can help you recover if your identity is stolen. And they provide data analytics and other business solutions to companies across various industries. Now, let's talk about why understanding Equifax and your credit report is so important for you. First and foremost, your credit report is the foundation of your financial reputation. It influences your ability to get loans, rent an apartment, and even sometimes get a job. Monitoring your credit report allows you to catch errors that could be negatively impacting your score. Imagine a late payment being reported incorrectly, or an account that doesn't belong to you showing up on your report. These errors can happen, and it's up to you to catch them and correct them. Secondly, understanding how credit scores work empowers you to take control of your financial health. By knowing what factors influence your score, you can make informed decisions about your borrowing and repayment habits. For example, you'll understand the importance of paying your bills on time, keeping your credit utilization low, and avoiding unnecessary debt. Thirdly, being aware of the information Equifax collects can help you protect yourself from identity theft. By regularly reviewing your credit report, you can spot suspicious activity, like new accounts you didn't open or inquiries you didn't authorize. Early detection is key to minimizing the damage caused by identity theft. Now, you have the right to access your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, for free once a year. This is a right granted to you by federal law, and it's a valuable opportunity to check for errors and monitor your credit health. You can access these reports through annualcreditreport.com. So, to recap, Equifax is a credit reporting agency that collects and stores information about consumers' credit histories. This information is used to generate credit reports and calculate credit scores, which are essential tools for lenders in making lending decisions. Understanding Equifax's role and actively managing your credit report is crucial for maintaining good financial health and achieving your financial goals. It's about being informed, being proactive, and being in control of your financial future. With that said, thanks for watching, and until next time.